And as I see similar policies being enacted here in the United States and our debt climbing so fast, I mean, $1 trillion was unthinkable. If you look at just the national debt over the last 50, 60 years in the United States, it was like a flat line for a long time. And then all of the sudden, some policies were enacted and you started to see a shoot upward. And then all of a sudden, just really skyrocketed. $1 trillion to me that's monopoly money stuff. Check it out, guys. Buying stuff's fun, and we have on our website something called Poet Points, and it's basically cash back, and it's so that you will come and be loyal to us forever. On January 1st through the 6th, we have double Poet Points, which means you get more for less, and that's a pretty awesome thing. So rush our store and help us stay in business as politicians try to put us out. All right, guys, I've got a real exciting guest. It's Michael Brooks of Centera Investors. He's a nerd with money and things, and he's my nerd. I absolutely love him because he's super brilliant and he's going to help us all. Today, I wanted to tackle what in the world do you do with your finances if you are predicting some type of really bad economic, socio-political collapse. And I don't want to be all doomsday-ish, even though I have been reading the Futuristic Prophetic Manual, 1984, and I've got my cool Zombie Slayer gun here. I don't have to be paranoid because I have things like this. But I reached out to my financial advisor, the one that handles my portfolio and handles our 401k plans for all the employees at Warrior Poet Society. And I asked Michael Brooks of Centera Investors, who's our guy. You're about to meet him, and he's super smart, and he's not like me. So he's a good resource. But I say, Michael, I want like a doomsday package. I'm not interested in growing my investment as much. I just want, if all of a sudden war broke out with China or hyperinflation or the stock market just popped like a bubble, I want to be able to hedge, my bets against it. So if everything went sideways, I'd be okay. It's more about protecting than building, right? And so give me the doomsday package. That's how I want my portfolio. And so I reached out to Michael Brooks, and I think he thinks I'm crazy. Michael, thanks for joining us today, man.
Well, you're not crazy. I will say that. We are all in this together, and I feel like one of the great things that we can do is really just talk about how education might work and when it comes to finances. And I think that's one of the things that being empowered with the knowledge of how different, what we call in the financial world, asset classes. They just mean, for instance, you've got US stocks or gold or cash or bonds. There are different ways you can put your money into different kind of investment vehicles. And that's where I think when we look at different things that might happen in the future, such as, like you mentioned, inflation or some kind of doomsday scenario, what kind of things can we be investing in as opposed to just hiding it under the mattress and not making any money, which doesn't get us very forward in our goals for saving for either retirement or buying a house or whatever we're trying to save for. So I feel like we can invest really well still, but we need to be in the right place at the right time. And I think that's where we could have a really good discussion through that kind of education piece on how to know what might work best in which environment.
Got it. I guess the first thing I want to lean into and ask you about or tell you where I'm coming from is I look at a country that used to be incredibly wealthy, someplace like Venezuela, and you can insert 100 other countries that were doing really well, and then all of a sudden Marxist policies crash that economy. Now, all the big wigs, the economists in that country or the financial guys would be looking at their own little stock market analytics and their own projections, looking like, look, we've got historic trend analysis, and because it's stair-stepping up, it'll continue to do that ad infinitum. However, that's inductive reasoning. Just because it's always done it before doesn't guarantee it always will. And there did come a day when everything crashed and it hasn't bounced back. Venezuela is a disaster. And as I see similar policies being enacted here in the United States and our debt climbing so fast, I mean, $1 trillion was unthinkable. If you look at just the national debt over the last 50, 60 years in the United States, it was like a flat line for a long time. And then all of the sudden, some policies were enacted and you started to see a shoot upward. And then all of a sudden, just really skyrocketed. $1 trillion to me that's monopoly money stuff. That's not real. Real money stops in the billions, not trillions. That's silly money. And so for me, I get that no country thinks that it's ever going to happen to them, but it does in fact happen. And I think it could happen to us as well. And given what I'm seeing going on, I don't know. I just think it's going to pop. That's what I think.
Well, I mean, and if you think that, which is a very legitimate view, in right now when we have stocks at all-time highs, we've had quite the recovery from a severe drop in markets earlier this year with COVID. That ability to have other kinds of things do well if stocks don't hold up is a great preparation tool for us, especially right now. If we were at 2009 March, where we were at the very bottom of the financial crisis that we just went through 12 years ago, that'd be a different story. We're not there now. We're at where stocks are quite high, and so we're in a different kind of stage in the economic cycle that we feel like that might be we might benefit from. Hey, we've done really well. Now there are a lot of things economically that are worrisome. Let's see what we can do to bring some risk off the table.
Got it. So in just different scenarios, and you talked about a tool yesterday when we were on the phone, some software that lets you kind of do a thought experiment regarding if all of a sudden war happens with China, this is what happened. What exactly was that?
Yes, Hidden Levers. Hidden Levers is the name of the software, and it's an institutional program for asset managers, guys like me that are managing money for other folks. How can we use this to inform how we're managing money?
So now you can have some Chicken Little customer like me who's like, Michael, the sky is falling, bro.
You can have the sky is falling, and the great thing about this is what I really enjoy so much about it is be able to show visually what would happen if we had these sort of, they haven't happened yet, they may happen in the future. We don't really know. We don't have a crystal ball. But if they did, can we use some kind of history and some kind of data, some math, to figure out where stocks are now, where they might be in a very nasty scenario economically, and then what are some other asset classes, like I mentioned before, bonds or gold or cash, how would those handle those kind of what we call stress tests with very negative news in particular markets, and especially maybe coming up in the next couple of years for us?
Is it sophisticated enough that I said, Michael, what if the energy sector is just eviscerated because of Green New Deal? All of a sudden, a bunch of oil companies or car companies, everything goes bust, taxes go up, small businesses start toppling under the weight of all that money. Could you manipulate something as specific as, I think the energy sector is going to die?
Yeah, we have lots of different scenarios. Actually, there's about 30 main ones, and within each one, there are about 4 or 5 different levels of severity with each one. So that's really cool. So you can say, hey, I think oil is going to go up. You could have it's going to go up gradually. You could have a scenario where oil goes up precipitously right away. And to see what kind of effect that might have on stocks versus bonds versus gold versus, any kind of asset class we could throw at it. Real estate is a great example of another one. All those will be affected somehow. And it will be very interesting to see what kind of scenarios we can build, and we can combine all these different scenarios into kind of one overarching, hey, what am I concerned about? And then visually, how can I see how these other asset classes might perform? And therefore, we can make tweaks to the portfolio in order to make sure that we can accept the level of risk that we're projecting.
Copy. I'm real pleased with what we did this last year. Thank you so much. I got a 16%
Yeah,
return on my portfolio. And when I say
excellent.
portfolio, it sounds like I've got a lot of money, and I don't. One day I hope to, and I'm going to partner with you, Michael, to bring in the bacon.
That's why I have a job. Yeah.
But I
We're
just
doing
feel
this together.
I feel like I should be sipping tea with one finger up and talking about my portfolio when really most of my portfolio, guys, it's in guns and bullets. But let's be real. I'm trying to build wealth, but we've had me at a threshold of more like medium risk to a little bit more aggressive in some areas. But I wanted a kind of middle of the road risk until yesterday where I called you. I'm like, dude, I'm not interested in, double digit growth anymore. I don't care about that anymore. What I care about now, and I've felt this way for a long time, I just didn't have the courage to tell you I was Chicken Little. And now I'm kind of like, you know what, Michael, this is what I feel like. And I'm going to be pumped with a 5% return. Just keep me in front of a normal inflation. 5% return will be great. But if anything goes crazy in the market, I don't lose what I've done. I'm more about protecting in precipitous times than I am about growing. My job and work will grow, wealth, hopefully, unless Biden puts the gun industry out of business. I don't know. People are probably real mad right now as you're getting to see a little bit behind the veil of some of my fears and whatnot. And I'm trying to be nice and invite y'all into a private conversation that I have with my financial advisors that hopefully y'all would be able to benefit from that. So don't throw me under the rug of like, I don't know what's happening. I don't know what's going to happen. And I don't know what to do with my finances either. I'm not sure. And so I'm trying to figure this out, and I've got expert advice here, the subject matter expert. So I hope you guys extend a little bit of grace as you recognize, I don't know, I'm here to learn as well. So I'm on a journey figuring stuff out. But Michael, I appreciate you taking care of me this last year and the time before. But now I'm shifting in. I want Doomsday Package now. And so I'm ready to lose I'm ready to lose what I could have gotten. I'm not interested in getting that anymore. I just want, if things go bust. So I asked you to put me together a bit of a doomsday package, which I'm switching myself to immediately. I'm immediately going in. I am very risk averse now. So what did you put together for me?
Well, here's an example, and I don't want to get too specific with for right now because it could get a little bit into the weeds and be complicated, but I'm going to make it very simple, I hope. And I really recommend right now that when we're building this, and I like to call it an all-weather portfolio, but I like Doomsday too, because this will hold up in a very, very nasty situation that we might have if things all go bust. Well, one of the things with this portfolio that we can really do is say, hey, we've got all these different areas like I discussed. US stocks, for instance, international stocks, you've got cash, you've got gold. And how do those things, what we call correlation, meaning are they moving in the same direction all the time, right? Because what we want to do is we want to say, hey, we want to have some stocks in there because stocks are just over and abundantly the best place to invest over long periods of time. But do we need 100%? Do we need all of the risk of the market? Not necessarily. And so if we're looking at, especially in this time of, hey, how can we be a little bit more careful? How can we take some of that risk off the table? We can mix in some other investments such as gold, treasuries, cash, and stocks, have an almost equal weighting of those. Okay, so we're looking at now, instead of having a portfolio of 100% stocks, we may drop that all the way down to 25%. But instead of that, we'll have a 25% gold, 25% US treasuries, 25% very, very short term or like a cash savings kind of bucket. That's not to make a whole lot of money for us. It's to protect us from the real moneymaker, which is going to be the stocks portion, right? Because the stocks is what's really going to send this thing to further and higher growth. But if stocks do really bad, we have the other ones to back it up and to be there as a support, as a ballast to do well in bad times. And that's what we're trying to build with this doomsday portfolio.
You had me at ballast. Good usage of the word ballast, man. Bravo. Fantastic. I immediately pictured money in a castle, and it was awesome. It went pure medieval. Ballast is a good word.
Yeah. But here's another subject, if I can just interject here real quick,
Sure.
because I think this is really important for us to understand. And this is what's really hard when we have all what we call a big field now we're dealing with is behavioral finance, meaning what are things that we may be dealing with personally that may affect our investment decisions, right? That affect our future. And how can we be prepared by understanding what those issues may be? And one of the ones that I think is really relevant right now is what we call recency bias, meaning what's done in the last couple of years is what's in our head, right? Like we've seen over the last couple of years a really good stock market since 2009. I mean, we have had quite an upswing in US stocks. I mean, it's just been fantastic to be invested in the market in the last 10 or 12 years. But anybody who's been around for a little bit knows that's not necessarily the case all the time. And so I think that when we're trying to talk about, hey, I may be, who knows? You may be saying to yourself, I'm 32 or I'm 35 years old. Do I really need to be de-risking? Well, who told you that 100% US stocks was the only way to go in the first place?
Right.
And that's where I feel like we really have a very short memory when it comes to what can and can't happen in finance and in stocks. And I think that that's where we can really build some discipline, hunker down for a bit, make sure that we understand where we're at risk wise, and then be able to invest wisely and not greedily. And that's kind of how I like to put it.
No, it's good advice. I get it. But for me, we're back at the historical trend analysis stuff where we're always relying on built-in capitalistic machinations which can rescue and bounce back. As soon as you move from a capitalistic system to an overarching government control socialistic, you lose that possible ability to bounce back. You've taxed yourself. You've tried to buy yourself out of debt by making more debt. And that's what it looks like. It just doesn't look like that works because it never works. And now people are going to freak out in the comments. I don't care. I'm having a chat with my financial advisor. You guys shut up like, hey, quit eavesdropping, guys, as I publicly put this out everywhere.
No,
there you go.
It's a legitimate concern. And it's not, let me put it this way too. What you're saying is a very deep concern that goes just beyond, hey, the next couple of years. I mean, we are talking about a global problem, actually, where we have negative interest rates in Germany right now. You have had decades and decades of U.S. stock underperformance in a company like Japan since 1989. Wow. This is the second largest economy in the world. This was the first or the largest economy in the world back in the late 80s, surpassed the U.S.
Wow.
Now that's reversed. I mean, U.S. is number one, of course, but the point is that these things can last a long time if we're not careful. And that's where we have to really be diligent in making sure that we're still supporting the system that you talked about, where we're still trying to profit. We're not digging ourselves in a hole monetarily by keeping debt, keep going and keep adding on to it. And that's the real worry too.
Got it. You made a little bit. Sorry, go ahead.
No, go ahead. You go. You okay? I'm good.
Are you just deferring to me because I have this?
I think so. That's a little scary. Tab at the bottom of my screen. It's intimidating. I've never had an interview with one of my clients before with a massive, gun right in front of my face. But hey, I'm good.
I call it the zombie slayer, the zombie slayer, and I just thought it was very apropos dealing with apocalyptic dystopians, and so it's fantastic. So you made a little bit of a funny jab, the proverbial money under a mattress, and I did want to ask.
Yeah.
Given that I have certain risk thresholds, it's changed for me, and I'm probably wrong, but I just want you to do this anyway. I'm asking for you to shift me to the Doomsday package. If y'all are like me, don't take my advice. I'm probably wrong, but that's what I'm asking for, and that's effective immediately. I'm shifting to the Doomsday package with Centera investors. Don't follow me at your own risk, but if I am right, and things go bust here in the next year, 2, 3, 4, 5 years, whatever, is money under a mattress a good idea? It is because we've got our Fed and stuff. Can we kind of stave off the hyperinflation problem? Could we be able to offset that so we can artificially control it? Is hyperinflation something that could wipe that out? Or given my angst, would money under a mattress a little bit be a pretty good idea? I've already got lots of bullets and lots of guns. Bullets are something that you can trade with. I can sell it for more than I bought it for. I can hunt with it and I can defend myself with. And so when it comes to people talk about gold coins, I'm like, gold coins, I've got bullets. It's way better in every way. Bullets and guns are better. They never go down in value. I can hunt, I can defend, and I can trade. And so it's better than silver. But I think gold and silver physically in possession, money under the mattress. It's not under the mattress, guys. Please
don't put money under a mattress. At least a fireproof safe.
Hey, like every sensible crazy prepper, I buried mine, okay?
It's paper in the end, okay? So just know it's paper.
Very good. But money under a mattress, is that such a bad idea given how I think?
Yeah. Well, the problem with money under the mattress is one of the things that you keep alluding to that is a very foundational theme we've heard in economics the last number of years that makes the money under the mattress a problem is the scenario of inflation.
Right.
And what inflation really means is it means your dollar is worth less tomorrow than it is today if inflation is going up. And we've actually been in more of almost a flat or almost deflationary environment, depending on how long ago you want to look at it. But since we've added so much debt, since the whole world market has tried to pull itself out of one financial crisis after another, one being the financial crisis back in 2008, and another being this latest COVID round of unbelievable trillions, like you mentioned, going into the system, that causes inflation to come back into the radar as being worrisome. So with that, the problem with the money under the mattress is that every day that goes by that you're leaving under the money under the mattress is you're actually giving some of that money away. And you're giving that money away in the form of inflation. So if I bought a gallon of milk today, it would be far more expensive than it was back when I was born in the 70s, right? Now that's a very, very simplistic way of looking at it, but that's pretty much the purchasing power of your dollar is extremely important of why we're investing in the first place. And it's the foundation of why we're investing is we're trying to beat inflation. And so that's what we're trying to get to, that why you would want to have something still being invested, not putting it under the mattress, but yet we're still getting a meaningful enough return to beat that inflation. And that's what we're trying to do here.
Got it. Cool. If anybody is interested in doing Doomsday Package or just investing with you because they like you, how can they get a hold of you?
You can go straight to our website, centerainvestors.com. We have our phone number there, and we would gladly set up a time to talk on the phone or on Zoom like we're doing now. We're setting up appointments. for more for consultations, or if you want to just check out our platform for investing, it's right there, a click away, right on our website, CenteraInvestors.com.
Great. We'll put links down below for everybody to help them out. Also, since you were so kind to give me good advice, and I appreciate that, I'm literally making moves based on the package you've put together for me. I'd like to give you a recommendation. You need to get AR-15s in bulk mass. So.
I'll get on that, actually. Bulk in mass, and just hold the AR-15s in big wooden boxes right here in my office. I think that'd go over really well, don't you think?
I think you're onto something. Absolutely. Yes.
All right.
You're saying it as a joke, but I'm like, that sounds pretty great.
No, that's like, actually what we should be doing right now. Yeah. I still have this very fond memory of the scene of, what was her name? Linda. Who was the one in Terminator 2?
Sarah O'Connor, right?
Sarah O'Connor.
That's it. I was blinking and I'm
Sarah
like,
O'Connor.
Man, this is un-American of me to not.
Linda Hamilton, I think, is the actress name, but no, it is Sarah O'Connor, and she's got the bunker under there with her massive weapons, especially that one. What was the grenade launcher that Arnold used against the cop cars from the?
Imagining it's an M203. I carried one of those overseas.
That's what I want.
I carried that for at least one tour overseas. M203 shoots a 40. Shoots a 40 Mike party favor, and it's pretty fun. Pretty good stuff, man.
Impressive.
Hey, thanks so much for helping us out today.
Pleasure.
Really appreciate it. And until next time. See you, man. Hey guys, thanks so much for tuning in. Again, this wasn't advice for you. It was advice for me that I'm interested in, but hopefully you benefited some as a fly on the wall. Remember, we are coming up on our 1 million subscriber giveaway, so make sure you check links down below, register on our website, because we're giving away thousands and thousands and thousands of dollars. That's 3,000s, but it means tens of thousands of stuff. And there's going to be a ton of winners. That could be you. It could be you. Everyone that always wins something always says, man, I never thought it would be me, but then they did. And so it could be you as well. So make sure you register for that. Comment, subscribe, all of that chat. You should know the drill. Most of the people watching think you're subscribed and you're not. And you probably haven't hit the notifications bell to all. So make sure you do that, guys. Really appreciate it, and stay free.